Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, September 3rd. It is 6:35 as I'm starting the video this morning. As always, please run your video player at 1.25x for maximum efficiency. Taking a look at futures very quickly. Equities are green, up about 0.2% across the board. I did see, I think I saw a tweet or something, like in the past week or so, the overnight sessions have been largely all the gains, with the regular session being actually a drag. And there's been periods in the past where we've seen that, where it'll ramp overnight and then sell off in the daytime. So anyhow, interesting to note. We may be entering some type of cycle like that now. We'll have to wait and see. Of course, the big thing this morning is non-farm payrolls. That's going to be at 8:30. I think the expected number is 725,000. Now, if we get get a million plus, you're probably going to see rates rise. If we get, a disappointment type number like 500,000 or, whatever it could be, significantly lower than the 725, we've got rates sitting at 1.3% right now. So you would probably see rates fall based on that number. And then, of course, the read through of that is, if it's a really hot number, a million plus, then that brings the FOMC into focus, that meets in a few weeks to most likely announce their plans to taper, and then begin tapering in October, November. And if it's a real bad number, probably going to hold Jay Powell and company off, because they're going to say, wow, what happened to the jobs? Now, the fly in the ointment is the runoff of the added unemployment benefits is just occurring now. So that's not going to be reflective in the August numbers. So, do people, or have people just, held on to those benefits to the very end? And now, if they run off, are they going to, go out and seek employment? Or did they kind of front run that and start picking up the pace in August? We'll have to see. We've also got a PMI composite number this morning and ISM services. I did not see any earnings today of note. Of course, we're heading into the 3-day weekend. So let's quickly run through this. Got a lot of charts here this morning. U.S. dollar continues to work its way lower. We dropped out of this channel, dropped through the 50. Now we're testing the 200 here at 92.25-ish. I do have another support layer I dropped in at like 91.72, and then of course down here much lower is something around 90.7. Falling dollar is gonna help the commodity complex, should help precious metals, although it hasn't helped so far. Gold has been totally stuck in the mud, not doing anything at all. And of course, if there's a big jump in rates based on this payroll number today, you would probably see the cyclicals reopening, bank trade kick into high gear, and it may throw some cold water on bubble stocks and tech in general. You see the scenarios up here that we've been working with over the last quite a little bit of time in 2021. If you're new to the channel, thanks for stopping by. If you want to go to the next level, there's a link in the show notes where you can jump over to the blog site, drop in your email address, and then you'll get all my content whenever I send it out, over the weekend, at night, after hours, before the market, etc. During the day with little market notes and whatever I happen to see. But anyhow, here's some extra notes about the registration process. And also, you're welcome to follow me at Twitter. Probably not as active as I should be or want to be. And you can drop me an email anytime right there, chris@tradersprofitcompass.com. Here's the 10-year yields settling in here about 1.3%. That's going to change today, either up or down. We'll have to see which way it breaks. It's funny how, like, at important dates, it'll settle in to an important level on the chart. That's usually the way it goes. So just remember, a break higher in rates favors cyclicals. A break lower in rates favors technology, bubble stocks, high valuation names, etc. Here's TLT right on this pivot point of 149.50. It most likely TLT will either break out either above or below this triangle, this symmetrical triangle, and probably chart the course or the path going forward for quite a little while, given the importance of this print, and also with the FOMC on deck with a policy shift. Going through the oscillators, they're working their way higher. This is the New York oscillator. We're up here at 37. I wouldn't call that particularly in a danger zone. I want to see, or I consider that getting over 50, getting over 60, you crank up the yellow flag, which eventually turns to red as it pushes above 60 into 70, 80. We're not there yet, but we are working our way higher. A little bit more concerning is the NASDAQ oscillator. We're at 52. So what I wanted to convey on this chart, heading into a 3-day weekend, right? We talked about that yesterday. If there is some kind of big, massive move today, based on this number, and just the Q's rip and blah, 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 you'll know it when you see it, is basically what I'm trying. Semiconductors up, Q's up, FATMAAN up, everything up today, some kind of a massive rally. You can be assured that this will pop over 60, at the end of the day. It's unfortunate you can't get intraday readings on this particular number. It's calculated after the close, so you just kind of have to guess at where it's going to be. But given we're this close, like I said, if you see a big rally in the tech names, you can know that you're going to be moving into this overbought area, and you can see back in time where that has lent itself to reversal points. So what I would do today, if I was, loaded to the gills with technology, is one, if I was in option positions that went in the money significantly, and you wanted to stay long, I would certainly roll those strikes up to even money or a little bit out of the money, so you can have some optionality on a further advance, but you've taken the lion's share of your profits and pulled those in. Today, if there were names you weren't wholeheartely committed to, and they had a good pop today, maybe you want to lighten up over the weekend, over the 3-day weekend, given that we would most likely be overbought. Of course, the other option that we've talked about is buying some protection into September. That would probably let you sleep a little easier over the weekend and enjoy the holiday with your family instead of biting your fingernails waiting for a gap down on Monday night, which is always a possibility. It's not a prediction. All I'm saying is you would be thinking about that a lot over the weekend if you carried home a significant, like I say, loaded to the gills type positioning long in technology. So you could go out into September and get yourself some QQQ puts, or if you prefer, one of the leveraged ETF, the bear leveraged ETFs on the Qs. And the reason I say that is we're at the low end of the VIX range. And so, as you see here in the past, and we've discussed, it hasn't been hanging out at 15 very long. And we tagged that number both yesterday and the day before, and then bouncing back up in the afternoon as we've had these weak afternoon closes of recent note. So, just be comfortable as we head into the close today. Of course, there's options expiration today on weekly options, so make sure you review all your portfolio positions. Make sure that there's nothing there that you forgot about, and just tidy things up heading into the 3-day holiday. Moving on to equal weight SPY, grinding higher as we've been talking about. Price above all the exponential moving averages, 8-day, 20, 50, all aligned, all bullishly stacked. The fly in the ointment is the bearish divergences, which we've talked about. Yellow flag, not a reason to sell. Where would I get concerned? I would get concerned if you saw equal weight SPY, drop down below the 8 and the 20, and then drop out of this little channel that I have here. And that looks to me to be around 155. And you can see here that if you were, if we had dropped down below 155, then we would be out of the channel and approaching the 50 EMA in green. And then, of course, once, if and when you would lose the 50, that would put us back in this trading range. And like we always say, you don't want to go back in a trading range once you've been out. Then you would be looking for a move back down into something like 147, 146. So that's just a peek ahead. SPY 2-hour, upper half of this rising trend. I think today on the downside, you can key off of 451. I would not like it if price dropped below that. Of course, you've got the highs here, and you've got yesterday's close at 453.20. We're going to have a green opening. There's going to be a little gap to take care of, right off the bat. If what they've been doing lately is, coming back to fill that gap on the open, and then they go forward. But every day is different. You got to be really nimble on the open if you're going to try and trade that first bar. I usually don't. I usually like to wait at least 15 minutes for price discovery. Let the volatility settle out. You can get really on the wrong side of things if you guess wrong on that first bar. So if you're trying to actively trade it, I would recommend letting things settle out for 15, 20 minutes. Some people even push that out to a half an hour, really start their trading day at 10 o'clock, and then use the range that's been established as a guidepost, if you will. So upper half of the channel, I think 451 is key for this afternoon as far as holding that on any kind of downside move. Here you see these levels. So on the 30-minute chart, we do have some pretty steep bearish divergences. As we're very close to the highs, you'd expect momentum turning up, but it really isn't. So this morning here, I think you can be long above 453. You can see that yesterday we filled that gap, big gap open, stall, and then they sold it off in the afternoon. And that's the same thing they have done really every day this week now that I look at it. Move up, sell off, strong morning, sell off, gap up, sell off, and then yesterday gap up and sell off, although we did have a nice recovery bar into the close. So key off 453 today. If you're actively trading it, above, I think you can look for blue skies. Below, I would be looking at 452 and then 451. We've got this open gap yet to take care of. Qs. Same scenario as the SPY, really. Gap up, then they sold it off. I think this morning here, 380 is a good pivot on the 2-hour chart. And you can see I haven't drawn it in here, but you could easily do that on your charts at home. A nice trend line up through here, and then a parallel trend line across the top, and that would give you the nice rising channel that we've been in on the Qs. So on the 2-hour chart, key off of 380. Here's the 30-minute chart. A little bit different. We've got, I think you can use 380.50 on the 30-minute chart. If we break above yesterday's close, you can get long. And then the high was 382.31. So of course, any break above that, then that would give you an opportunity to move up your stops, etc. And then on the downside, 379.50 right here, and then bring you down to 378.50. I think that's an important number to note on your chart, 378.50. Why? Because below that, you not only have a gap to fill, but you've got a big volume over price void. And that's an area of very thin support. And so it could move rather quickly from 378.50, down to this gap. Probably you would get a reaction, but eventually fill it, and then come down here towards 375. So if you wanted to, if you're actively trading it, and for some reason heading into the 3-day weekend, people get a little panicky, or you get the sense that people don't want to hold longs over the weekend, that would be a really good place, if things started falling apart, to get short 378.50, and then your target would be down towards 375 as a first target. So that's a little look towards the downside, to have that scenario in the back of your mind, as you're trading today. IWM continues to do its thing. It's been outperforming. Was up 0.7% yesterday. Was up a lot higher before that crappy afternoon. Wasn't easy to trade. We won't see it on this chart, but I'll show it to you in a 30-minute chart. But the big picture, I think we're on this march to the top of the range, which is at 233, 234. In the pre-market here this morning, we're trading right around 230. I think that's going to be, I should have moved this up. I didn't do that. We'll have a gap below, and then price right here at the prior highs, right below 230. I think you get a break above 230, you should be long. And then below 230, be wary of a gap fill candle down below. And I don't know why, but it seems the first 2 or 3 candles on IWM, at least for the last week, have been red. It doesn't show it here because these are 30-minute candles, but yesterday there was a deep reach down candle that filled the gap, and some subsequent candles, then it recovered here. And the day before, this big red bar, that was an opening candle. You know, scary, but it went right down to support where you could have bought it. And then here's another one the day before that. Deep red candle, you know, scary. They're going to pull the rug. Nope, they stopped right at support. So know your levels on these, you know, and be ready for that big red candle. Now today will probably go green, or there'll be a big, you know, pre-market movement with the non-farm payrolls. So that might throw a little monkey wrench into that formula I've been working the last week. But remember, if there's a big green candle pre-market, that'll just make that opening gap that much bigger and maybe too juicy for people to resist. Facebook, bad day at the office, came down here, 375. I think you can use that as your pivot. Remember, this was the gap that we just filled. I wouldn't want to see price go below 373, because that would mean the target would be down here at 364 at the bottom of the prior range. So what this basically has shown so far is a breakout and a back test. And if you wanted to be long Facebook, this would be the place to be, especially if you got to move into 373. That would give you an even tighter entry, because then you could put your stop just below. So that idea of that big bull flag that we drew yesterday, you can see that I erased that because that setup was totally voided. Apple, second day in a row, they've done the giant opening bar and fade. You can see it here. This was Wednesday. Big bar, came right up, 155. Then they faded it yesterday. Almost got to 155, and then they faded it. Little bounce into the close. I think today you can use 153.50 as your pivot. I think it's going higher, but as we've talked about, the oscillator's getting up there. There may be a little pullback before then, so we got to be a little judicious with piling into these FATMAAN names into the holiday. So. But I think as far as active traders go, you can use this 153.50 and then look for either 155. If it drops below, there is this gap to fill just below. Tesla, pretty simple. Break above 740. You're looking for 770. See if it can break out. It's been trapped here for 3 days, but not moving to the downside at all. So that's good. These reactions have been contained. We filled these 2 gaps. It's come up to resistance right here at 740. Like I said, I mean, when you pin a $750 stock and you keep that trading range, you know, $5 or $6, I mean, that's saying something. There's some serious resistance at 740, obviously, but there's obviously also some serious buying pressure just beneath it. Otherwise, this would, you know, fall back. So there's been a bid at say 732.50, and just keeping it pinned here. So I would expect if you got that breakout, whether it's today or next week, I think it would be pretty powerful. And remember, this being Lotto Friday, right? You get a runner on something like, you know, Tesla, you can make a lot of money on that. Only bet with what you're happy to lose. But with this setup, there's a lot of pressure there. And if you get that breakout, that could open up a really nice runner. So keep that in mind. Don't know what's wrong with Microsoft. It just 305 has been a wall, and they've just been fading it every day. I think today, 301-ish, 300.5, whatever you want to call it, sitting on this gap. I imagine this is going to fill just based on this price action, but I'll have to wait and see. I think if it recaptured this 301.75, 302 area, you could get a move up to 305. So on that recapture of this support level, I think you can be a buyer there, especially if the market looks strong. But for some reason, been a lot of profit taking and fading going on in the name. Amazon, there were faders yesterday. I think you can key off of this 341.71 for if it recaptures that. I think you can be a buyer there. We've got the levels clearly marked. If it gets soggy, 34.40 I think is a good level as a pivot level if it were to go down, and then you can toggle off that the rest of the day. Google, and this may have been the reason for kind of the sogginess in general of the FATMAAN names. I guess the DOJ is opening up antitrust legislation. I did not research it, so I'm sure some of you out there know all the details. But this was largely a result of the acknowledgement that they've got an ongoing investigation into Google that may have bled over into Facebook and may have bled over into Microsoft. Antitrust. Oh my God, all that kind of stuff. But anyways, from a technical basis, setting the politics and news aside, got to recapture 28.75. That's the bottom line, or this could fall down to 28.40. If there was a let's say the market and the pre-market gets strong based on those NFP numbers, and you get a little gap up here in Google, pick a number, whatever it is, and then they start fading that, and they come back below this 28.75 number, that would probably be a compelling short from the standpoint of recapturing a level, then losing it again. I would think that it would keep on going, and because there's nothing really here, as you see, you would have this prior low, but in my mind, I don't think that would hold. So if you get if there's a pop and drop, I think you can get short that, and I think you can look towards 28.40 on the downside. On the upside, of course, if it holds, and this was all just panic, then you could look for 29.10 on the upside. Netflix got a giant bar to open, and you'll recall that I had bought the fake breakout the other day right here at on the break above 590. I had got some 595 calls, and then got kind of trapped in them. Not kind of, I was trapped. But that big opening bar candle gave me the opportunity to get out with a small profit, which is great because I was a dead duck right here. So anyhow, I was bailed out. So we ran up to the high 590s, then pulled back. I think as long as it holds yesterday's close, bulls are fine. If we drop back below and have a bad day at the office, there's some Fibonacci numbers here for you to take a look at, because not a lot of trading in this area, and if things get soft, it could pull all the way back to 560 for a breakout and back test. So be aware of that. Semiconductors, nothing, dead in the water. 271 is your pivot. Higher you can be long, lower probably come back into 268. Here's an interesting chart I want to show you. Japan had a big overnight session. We haven't talked about these foreign country ETFs too much, but I do look at them. I have traded them before, but I think this is a nice setup. I'm not a big, as you know, I'm not a big fundamental guy, valuations and all this stuff, but I did see a snippet, I can't tell you where, that on a valuation basis, Japan is about 30% cheaper than SPY, than our domestic market. So, but here's the technical setup. We've had a run up and spent, this is a weekly chart, so it takes on more importance, right? So Japan has spent the better part of 2021 in a range between 58 and 62. I think this morning you're going to see that break out because on the Nikkei futures, they were up over 2%. So you're going to get a breakout here. And, hard trading turns into easy trading. You're going to see, it's not going to happen today, it's on a weekly chart, but what you're going to see is MACD start to turn up. MACD has already come to the 50% line on RSI and has turned up. And I think that, the measured move is going to be 56, or excuse me, not 58 to 62 is 4. So the measured move target, just based on the box, is going to be 66. But I think it's going to be a lot higher than that because of this run and the consolidation. I doubt it's just going to go up, 4 points from here. I think this is, leg 1 consolidation, leg 2. I would really consider a long position in Japan if we get the breakout today. And just to make note, DXJ is a hedged ETF that tries to account for the difference between the yen and the dollar. If you want an unhedged version, it's EWJ. EWJ. I haven't looked at the chart, but I'm going to see if it in any way looks more or less compelling. I've usually traded this one. Lot of trades you can see up here, 1.9 million shares. It's got a good option chain, but EWJ is fine if you prefer that. If you have a view on the currencies and you don't want a hedged version, then go with EWJ. We talked about CHWY yesterday. Gap down on earnings. So now we have a gap trade set up, and here's your gap levels. And interesting to note that look where the 200 comes in. So you could actually, if you wanted to, if you sense weakness or for any particular reason you just wanted to have a short position in your book, you could stay short against the 200, which is right here. I mean, it's right on the line right now. So let's say it moves lower. If it moves lower, you could get short against the 200. And then you've got the gap as your stop. And if you were to get stopped out, you can just flip long for the gap fill. And so, back up to the 50. If you're not interested in that, just set your alarm at 81.37 or wherever you want to get long, and then you've got the 200 as support. So really interesting spot there on CHWY. Five below, gap here from 202 to actually 216. I don't have that drawn quite correctly. That is the gap levels are correct. I don't have it drawn correctly. You can see I got it here about 214. But after the initial gap down, this fell quite a bit intraday and is down here right towards the 200. What I would do if I was interested in the stock is, if you got a pull in to either the 200 here at 185, or if you got a move down to 180, you can see that 180 was, if I drew my little support arrows, support, bunch of support here, another tag here, another tag. And then if you got a move to 180, that would be, your bazooka level, if you will, where you will know instantly if you were wrong if this broke below 180 and started heading south. So if you had got that move, that would be a really nice place to either alarm now or to just watch in the days ahead to see what happens. Otherwise, you may get a bounce off the 200, might not make it. Notice that on these occurrences, the 200 was below. Here it's above, so you might not get that complete move down to 180. It may find support here. But if I was interested in the name, I would just, try to get long either against the 200 at 185 or down here at 180. Why? Because even if you just move up to the gap, that's a $15 or $20 move. Why would you wait, for a $14 gap when you're all the way down here? If you want to get long now, and then you get a move back up here to 200, then the gap fill would be the icing on the cake after you already, got a good move higher. So that's that. Ball container. Great example of how these ranges work. Top of the range, bottom of the range. Didn't quite make it this time. Bottom of the range, and now rocketed from the bottom of the range to the top of the range and is breaking out. This is a $16 range, breaking out, points to 113. $16 added on to 97 is 113. So that would be your measured move target. Is it overbought? Yes. Is it stretched? Yes. But even if you didn't take it now, watch. I think you can be long anywhere above 97 and then see what happens. But obviously an explosive move. Obviously something's happening, whether that's the economy opening up or whatever. But very powerful move. Gave you Unity software yesterday, breaking out here. If the market continues to be strong, my expectation would be, and actually I don't even have it filled in here, there's a little gap up here as well. I would expect a move into somewhere between 150 and 160 on that chart. Okay. Oh, and here's purple again, down 2% yesterday. Yeah, down here towards this 24. Set an alarm there. If you get a break below, take it short. If you like it long for any reason, this is the place you got to buy because you're at key support. So let's leave it there. Long video. Watch non-farm payrolls in an hour and 15 minutes. A break higher in yields is going to favor cyclicals. A break lower in yields is going to favor tech. Remember that oscillator heading into the weekend, depending on how the day goes. Getting up there, getting into yellow flag country. Take one last look at your positioning into the 3-day weekend. Make sure you're comfortable. Make sure you can enjoy the weekend with your family. And then we'll pick it up on Tuesday. So this has been Chris Buss with Traders Profit Compass. Have a nice holiday weekend and talk to you next time.